Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is 5:16 in the a.m. Eastern Standard Time. So, tonight we're going live, as we usually do on Thursday nights for Thursday Night Stock Charts Live. That's where we review the weekly charts to see how we're poised to close out the week. Are we fading on the week? Are we near the highs of the week? How do we look as we proceed into Friday? And that sets our strategy up for how we want to be positioned into the new trading week. So it's free. Join us live, 6 p.m. Eastern Standard Time. There's a link below to get alerted 15 minutes to a half hour prior to us going live. You can click the bell button. That doesn't always work, and you get notified when we are live, so you miss out on the opening moments. So let's get to it. I'm late this morning because I've been scouring for news, and I haven't been getting to bed until crazy hours of the night. So to get started at 5 has been a little bit nuts. So 5:16, not too bad today. I'm guzzling coffee, and last night, Project Veritas put out a whistleblower video. I would encourage everybody to watch this, and I expect nothing from it. And yeah, well, we'll talk about that. Good morning to you. Um, if you had taken a look at this with the environment that we're in, you would have expected that uh, the media, the so-called quote-unquote media, would have pounced on this. If this guy's half right, it's clear election fraud. Yet CNN, am I on their homepage? Nothing. And believe me, I didn't expect it to be anything about this expose. New York Times, the old dead lady, nothing. I mean, this is front page news. Should be anyway. WAPO, owned by Comrade Bezos, nothing. And what's most disturbing is that the former pillar of media, and I do mean former, with the exception of a couple of hosts, Tucker Carlson and Sean Hannity. And I used to like Chris Wallace quite a lot, and I still like Brett Baer, but he had to sell his soul the other day. There's nothing here. There's nothing here about about hey Pat, uh, about this expose, and it's disturbing. It really is. So let's get to the markets, and let's talk about what's going on. You know, when we had the last time we had a contested election was back in 2000, and I'm going to go over that chart tonight. I'm going to bring up. I know I have it pre-populated already. The 2000 election, the reaction by the market. What we'll do is I'll overlay some correlations, or see if there are any correlations between now and 2000, and anecdotally or my gut reaction from memory, no, there's no correlation at current. But maybe I'm wrong. Maybe it was delayed, and we'll take a look at that chart from 2000, where we ended up, and what we should expect. Now, when you take a look at I went over this with numbers last night on Market Wrap. You know, all you need to do, take a look at the Dow. You know, for all these charts are pretty much looking the same. the Dow in particular is actually even worse than the S&P 500 because what we did was, where's my daily chart? It's the mining index. Duh. Okay. What we did is that we put in a high, September the 3rd, lower high, October the 12th. Do we put in a third lower high? Now, yesterday, they gapped it up really, really nice. Powerful market, very strong market, right? Only problem is that you're seeing a fade. You saw a big fade yesterday. You can go to the S&P 500. You can go to the Dow, obviously, here. The transports, a bearish key reversal day yesterday. A bearish key reversal. It's worth talking about. We were up. We closed down. This is my canary in the coal mine for where we're going. Why did we move up higher yesterday? I think it's because yields pulled back. Let's go to a weekly chart of yields. Take a look at the, this was not refreshed when I did market wrap last night, so I didn't have a visual to share. Take a look at the 10-year yield. Outside reversal bar. We have fully engulfed last week's price action. If we close here, remember, 2 trading days left to go. If we close here, we're moving down lower. What does well? Technology. What's correlated with the S&P 500 79% of the times? Technology. So if technology goes up, in all probability, 79-80% of the times, the markets are going to move up higher. That's the correlation. Now, this is an overbought market still. It's an overvalued market still. Earnings have not been great still. So while we're getting a reprieve here, do I believe that we are breaking out to new all-time highs? I'm not that smart. What I do know is that while it's possible, what I know is most definite is that I have a lot of resistance above. And that prior to us breaking out to new higher highs, we'll probably retrace and pull back and try to put in a higher low. And that's why I was confident with adding to short positions yesterday in anticipation of not a crash. It's possible the market's correct if they don't like what they're seeing in terms of the resolution to the presidency. Right now, what I think you're seeing is a relief rally based on the fact that you did not have a blue wave. You did not have a blue wave. What does that mean? No Green New Deal. That's why you saw renewable energies, solar stocks get hit yesterday. What else? Socialized healthcare. What did well yesterday? LABU, for lack of a better. This is a leveraged ETF, so keep that in mind when you see the percentage gain. 3 times leveraged ETF. Up 18.8% on the day. HLV. Let's go to CARE. This is another leveraged ETF. It was down yesterday. Oh, wrong chart. Cure. Sorry. I knew. I thought I was losing my mind. This is another leveraged ETF. That was up nearly 13% on the day yesterday. So you're seeing relief rallies in sectors that were under threat of huge regulatory change. Had you seen the blue wave that everybody was anticipating? And I said the other day, I said, I do not believe these polls. I brought up Real Clear Politics. They had Biden up by a ridiculous amount across the board, including Fox News, including IBD of all places, Investors Business Daily. And obviously, given where we ended up, that was not the case. And we were completely wrong. So I think what we're seeing here is a reaction, a relief rally. At some point in time, the lack of visibility, the lack of continued corruption within the media in their failure to report stuff like this. I mean, you have this one state where an election hinges, and you have a whistleblower that's coming out and saying, hey, man, we were backdating. We were backdating mail. That's against the law. And nobody wants to report on it. Crazy. It's dystopian, Orwellian, whatever you want to apply. Let's take a look at the pre-market activity. So they're going to gap it up yet again to Will's point. You know, the only thing I can really say here is that, you know, I always fall back when I find myself in this situation. We have longs, we'll do fine. We do have hedges on. They'll take it on the chin, but that's fine for now because we're going to get a retracement. We haven't broken out to new highs. We do not have clear blue skies above. In fact, we have a lot of resistance above and earnings which are not wonderful. If you thought the market was expensive last quarter, it ain't nothing compared to now. So it's still very expensive. So what I do is I fall back on, it doesn't matter where we trade intraday. What matters is how we close. If we fade on the day as we did yesterday, then I'll be tempted, if we're not breaking out to new higher highs and above resistance levels, and we fail to capture those resistance levels, I'll be looking to lean into shorts for a reaction to the downside. So this is more like jujitsu investing right now. I see no real value in this market. Are there trades, counter trend trades? Sure. But I think they'll die out. I mean, we took SAP, continued up higher yesterday. It's going to continue up higher again today. It's going to gap up 116. We call the bottom on this at 105, around there, 106. Let's see how ExxonMobil's doing this morning. ExxonMobil flashed a doji formation, as did all of energy yesterday. Sign of indecision, held support. Let's take a look at other indexes. Let's go to the dollar. The dollar was up yesterday pre-market and it faded. Look at it today. Hammered. This is a huge move on a currency. We have taken out the lows of last Wednesday. We're a bit extended here relative to the 3 standard deviation Bollinger Band. All that means is that I would expect to see either a quick pop-up higher and then a resumption of the downtrend, or B, a sideways consolidation and then a resumption of the downtrend. The dollar is in a lot of trouble. And this all goes back to confidence. Confidence in the U.S. Right now, we look like a banana republic. Corrupt. Very, very corrupt. Dollar weekly time frame, bearish reversal bar. After we broke out to new higher highs this past week after a strong consolidation. And granted, I want to preface what I'm about to say on the fact that we have 2 trading days left to go. A lot can happen. We're not being doom and gloom here. But the dollar is at the precipice of possibly, if we close out the week where we're at or lower, at the precipice of breaking down to a major new lower low. So if we're seeing price action like this, there's only one area I want to be looking right now. And that area is, drum roll please, commodities. We'll begin with gold. Yep, gold's up well back above the 1900 mark. Let's take a look at it on a weekly time frame. Gaining steam. This is a healthy chart. Let's clear all of this off. Breakout. Not on a 15-minute time frame, not on a hourly time frame, not on a daily time frame, on a weekly time frame, assuming that we hold these gains and we close out the week where we're at, slightly below where we're at, or better. In essence, we need to hold 1900 on the week. We hold 1900, we have a breakout on a weekly time frame. So what does that mean? It means that that fear trade, which did not appear yesterday post-election, is now appearing. Why? It's because it looks as though the fix is in. We're going to have possibly, I don't want to be a doom and gloomer here, but we need to get back to work. And being traders, we need to go with what the probabilities appear to be. And, you know, I truly wish for, you know, whoever gets elected, I wish for the right thing to happen for the nation. I want the election to go honestly. And absent that, we don't have a nation. So whoever gets in, as long as it's on a fair election outcome, I'm good. I'm good. But if it's not, then we have a problem with confidence in this country. And if it's a Biden presidency, we need to make the assumption that while, yes, no angel whatsoever in terms of spending, the Trump administration may have in their on their second term, may have done the right thing because they don't have to worry about getting reelected, may have done the right thing and addressed our fiscal nightmare before we blow it even bigger and the outcome is even worse. That was my hope. Under a Biden presidency, that hope is dashed. And all I want to do at this point forward, if it's going to be a Biden presidency, I want to own gold. I want to own silver. I want to own emerging markets. That's what I want to be in. Oil. Anything that has tangible value. I do not want to own Yelp. I don't want to own Yelp. Stocks like that. Once high flyers, no more. Groupon. I don't want to own it. Because people aren't going to be spending because their money's going to be taken from them in taxes. So I want an area where our capital is going to be safe. And that's going to be, unfortunately, in emerging markets, in commodities, because the dollar, you know, the story is here. You know, I don't, it's not me, it's not hyperbole. I'm just looking at a chart. If you have dollars in the bank right here, right now, is your store of value in US dollars? Are you confident here? Or are you more confident here with retaining your buying power of that $1? Me, I'm going here. Let's go to some comments. A lot of comments this morning. Bitcoin looking perky too. Yeah, I'm going to go to Bitcoin too, no doubt. Bitcoin is ripping. Amazon can hold if Biden wins. They'll get a lot of government contracts. You know, yeah, they're going to win. They're not going to. Think about what they were walking into. These big tech companies, and I had to be careful what I say. I'll probably ban this video now. They were under threat of being broken up. That's probably going to be gone now. You're going to have Senate hearings. Who cares? They don't do anything. So Amazon lost out on a huge contract, and they sued the federal government. It was for their Amazon Web Services, like $10 billion. And that went to Microsoft. And they'll get those contracts back, or they'll get new contracts. So Amazon's going to be under a Biden administration. They're just going to do just fine. So, yeah. Let's take a look at Bitcoin. This is the market sending you signals, folks. Think about it. Dollar weak, Bitcoin strong, gold strong. What's oil doing? Oil's down. It has reversed on the week, but oil is down slightly, flat. But I think we're going to break out. This is a 15-minute chart now. I think we're going to break out. At the moment, I remain optimistic for oil. We do have a ton of resistance up here. Copper. Copper's down. It's up on the week. You know, we'll be keeping an eye on copper. Copper is the type of metal that you look at for global growth. And, you know, under a Biden administration, the expectation was that there would be a lot of infrastructure spending, deficit spending to finance infrastructure spending, akin to the New Deal under FDR. So you may see copper move up higher. I think copper will do well anyway, given the transition supply chain out of China into Vietnam. I'm a broken record on this, but you know where I'm at with that. Let's check out bonds. Bonds continue to rally. Tech stocks, short term anyway, should do well. This is a weekly chart. It's a powerful chart. Are we extended intraday? We're coming off a little bit, 30-minute time frame. I don't like to use intraday charts for a macro bet. More so for entry points, exit points. I mean, this is a heck of a rip since yesterday morning. So I'm probably, at some point in time today, I'm going to put an advanced order out there and look to lean into the short side further in anticipation of a pullback. Not necessarily a breakdown, but a pullback, and lighten up, and then just sit on my hands. See how we close out the week. We'll do the week ahead commentary with members, formulate a game plan moving forward. We'll have more news that's actionable. Right now, everything is in a state of flux. I think that the only thing that we can conclude is that the information that we need, that's necessary for us to make clear and intelligent investment decisions, is nil. All you have is the alt media, which I think is going to grow. And in the face of corruption, you need to think about, you know, this normally doesn't end well, a managed economy. So Jay Powell, if you thought he was powerful under a Trump administration. If in fact it becomes a Biden administration, he becomes all the more powerful because they're going to need him to finance this dystopian nightmare that we're going into right now. So, am I still bullish on X? It's going to correct here. As you see signs of economic growth, yes, longer term, you'll know it's time to start rebuilding on U.S. steel. Once you see yields begin to firm up and proceed back up higher, and tech start to roll over, because that's your natural resource plays coming back. Let's take a look at what it's doing this morning. I know it was down hard yesterday. We booked profits on that one. Yeah, it was hit hard yesterday. I don't see a compelling reason right now to go chasing U.S. steel. I don't think that we have a dip that should be bought. Maybe I'm wrong. Let's check the charts before I speak. Okay, so no, I wouldn't be a buyer here, because your weekly chart, unless it's changed dramatically over the next couple of days, it was overbought. We are obviously now down on the week. We've taken out the lows of last week. So whenever I see a new low week over week, automatically I really put things into neutral and I wait, because the probability of a new weekly low is strong next week. I think that we'll probably pull back, retest 850 per share, 875 per share. That's more of an attractive entry point to me. We broke daily support yesterday, closed down below the 20-period moving average. I would wait for lower lows. I think we'll get that. But remember, prices of flat-rolled steel are going up. They have been going up for quite some time now. So I think any pullback here could be bought. Just a matter of getting a better price than where we're trading at current. Now, Franklin wants me to go over LABU. I mean, it had a powerful move yesterday. Obviously, we already went over that. The question is, do you chase it here? Good looking chart. No breakout yet. $65.18 looks like good support on a pullback, an intraday pullback, a retracement. Maybe a little bit up higher. Let's go to 64.50 per share for an overshoot. All right, so I think you could buy a retracement on the shares. But given this crazy market, if we close down below, if you want to range 64.50 to what was the low of this candlestick here from the week of the 12th. The low was $62 a share. If you want to keep your stop really loose, if we break down below that support level, we close down below that support level, 64.50 to $62 a share, I would exit because it's a failed, rejected breakout. Otherwise, I would wait for a close above 60.75. Yeah, that's resistance above. That would be my game plan. Ideally, you pull back, retest support, open a position, add more on a breakout, and a close. Most importantly, a close above $70.65 per share. Let's see how we closed out the day. Yeah, so we use an hourly chart. Yeah, it looks like they're going to probably take it up. Oh, this is today. This is this morning. This bar here, 4-hour time frame. They're trying to break it out. No go yet. Very close. So I would, again, wait for a pullback or a close above 70.65. All right, folks. Everybody have... Tilray. Gotcha, Pat. I didn't see that. A ton of resistance above here. We have broken out on a monthly time frame, but we broke out a while ago, back in what, April, March? No breakout yet here. No compelling reason on a monthly time frame to get long. Weekly chart. Yeah, the potential here for a Bollinger Band squeeze. Very tight Bollingers, and they're getting even tighter. Higher lows, RSI. Excuse me. No breakout yet. Weekly time frame. Daily chart. Stokes are finally back above that 50 mark. We attempted to break out, but were rejected. I think your 567 mark to 528 mark look like good risk-reward entry points. In that range, give or take a dime. And a great place to use a stop loss right below that 528 mark, because if that breaks, stock's in a lot of trouble. So that's my take. No compelling reason to go rushing in here. Watch for a retest of one or two of these support levels. In the pre-market, it's up, Pat? What do they do, Pat? Cannabis stock. Excuse me. All right, so they're rallying on the New Jersey news. Recreational use. Okay. It's coming off the highs. It's a little bit overbought intraday. I don't think there's any change really from the game plan that I put out there. I mean, if you're looking to buy it as a momentum trade, watch for the retracement. Take your crayon out. This is only a 15-minute chart. And watch for a breakout. If you want to put on some risk on a breakout above a resistance level, so be it. I would take a look at the short interest. Do you have that on your side? Given the fact that we spend so much time in a consolidation range, I tend to doubt it, but you never know. Looks like, what's CGC? CGC, last time I looked at it, was looking really good. Yeah, that really blew. So yeah, these stocks, despite the fact that, here's the irony. The lady who put, I don't know how many hundreds of people in jail for marijuana offenses, she's now going to be the VP and is viewed as marijuana friendly. Can't make this stuff up. So we're retracing here a little bit, Pat. So this pullback may be your opportunity to step in on these names. Let's take a look from a different view. Yeah, it was stair-stepping higher. I think a pullback today, absent a spike up this morning, was entirely probable. Loving the Stokes here. Loving the RSI. It's a good-looking chart. But nibble, nibble, nibble. That's all. Here, so this is what happened. We broke out. The week of the 19th. Retraced last week. Retracing yet again. Watch for your follow-through. Traders are going to be all over this on a close above $7.19 per share. Because that would mark a continuation move up higher. And we're above there right now. So it looks good. Looks good. All right, folks. Everybody have a profitable trading day. I'll talk to you tonight on swing trading today. Pat, did you want me to go over ACB? ACB is looking good. I like the clustering here. Resistance at $5 a share. But we've stopped going down. I think Tilray looks better because the rally has already begun. But it's a more speculative play. Aurora does not look bad. Stokes look good. RSI, meh. What are we doing pre-market? We're gapping up. I think you're overbought here already, though. But look at what happened back here. A lot of shorts in this name, probably. Here was your buy signal here. And this is what I'm talking about for Tilray. You get a retracement, and then you get the breakout above resistance, then you jump in. Looks good. Wait for a pullback. We're extended here. With that, folks, I'll catch you tomorrow night. Don't forget, join us tonight, 6 p.m. Eastern Standard Time. Thursday night stock charts live. We'll go over the weekly charts. Thanks for joining in. Have a profitable trading day. Be well.